Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, October 10th, 2011 is brought to you by Realtik. All right, let's get right into the mix here. Markets having a tremendous rally. Dow Jones Industrial Average up 266 points, NASDAQ up 73, and the S&P 500 up 32. Basically 2.5% to 3% rally across the board. Now, again, the rally is fantastic, but the key is you have to start looking at the bigger picture here of what is going on. Right now, a week ago, the markets were over 10% lower. In fact, it's about 11% move up from the lows of just last Tuesday. Let me zoom out on the charts and show you guys exactly how far this market has run. Here's last Tuesday's low at around 107.43. That was a new 52-week low on the SPY here. And remember, the SPY we're looking at, it is a mirror image of the S&P 500 in terms of an ETF. So there's your pivot low, and again, look at the rally we've seen just in 1 week's time. And the markets at this point are up over 11% from that low. In 1 week, up 11%. Now, you might say to yourself, well, that's a fantastic rally. Does that show a change in trend? And the key is on the daily chart, we have not taken out the level that would show us the change in trend. And I can briefly just jump over to that daily chart and show you these two white lines converging. This is your area that you're watching. Now, you are very close to that level, but you are not at that level yet. And you must continue to monitor that area to see if you take it out in the next few days. If you do when you close above and confirm, then yes, you could have a change in trend. As long as you stay below, it can be looked as an accumulation for shorting opportunity here. All right, now again, the key to this big rally is a little suspect. And again, everyone's cheering the fact that Sarkozy and Merkel, which again is France and Germany's leaders, getting together over the weekend talking about a little bit of a kind of bailout type situation for the banks and a kind of a TARP type thing like we had here in the US in 2008. But bottom line is this rally is suspect because it's happening when the bond market is closed. Think about this, guys. The bond market makes up the most money in the world of anything. I mean, it is the biggest area of money. It's the controlling factor of the markets. Many people don't know this, but the bond market is the key to the stock market's move. When the bond market is closed, think of it like this. When the cat's away, the mice will play. And essentially, you're taking out a major trading factor in the markets, and the markets have very little volume in them. Therefore, you can expect a rally. This is something I talked about over the weekend in my weekend analysis video that I posted for free on our blog that many of you guys saw. And it was also something we talked about late last week in terms of this holiday. All right, and again, it was expected to see some upside here. The market's again rallying beautifully to the upside today. Big rally, biggest rally in quite a while. But the question is, will it hold? Once the bond market reopens tomorrow, will it hold, or will we see a pullback in the markets? And that's really what I'm looking at right now and trying to figure out how this thing plays out the rest of the week. And again, based on the resistance levels, my analysis is showing we should see a pullback over the next few days in this market. Again, 11% move up in just a matter of 1 week is a little too steep of a rise. And again, anytime you throw a ball directly straight up in the air, it's going to come back down. Just the nature of gravity. Same thing holds. Now, whether or not it comes back to new lows on the market or back to those lows, I don't necessarily think that's the key in the short term, but you should again see a short-term pullback in this market. You can even see it happening on the intraday here just a little bit, although unless we take out this trend line right here, I wouldn't look for too much. Here you have a little bit of a print right here going down to this low of around 118.35, but again, the pivot high, you can see you're just staying between the level of 118.70 and 119.20. And that's your range right now. The market, again, with the bond market closed, gapping up and pushing up for the first hour, then they're just holding it sideways. Volume today, get this, folks, 133 million. We're generally averaging over the last month or so in the markets about 300 to 400 million. And today in the mid-afternoon session now, we're only at 133. So my guess is we do about 200 million today in terms of volume. And again, it's very light because of those factors. All right, now let's talk about some other key things here. So the markets, again, are having a big update. What's leading? What's going into resistance? Take a look at a couple stocks that I wanted to bring to your attention. What is moving here? Look at IBM. IBM's having a good day, but if you look closely at IBM, look at this, guys. You have a beautiful little double top coming into play here. Double top on IBM. So again, this short term, this tells me there could be a little bit of resistance on IBM, assuming it does not confirm above this level. All right, in terms of other stocks out there, what's leading the market? Well, JP Morgan continues to have a solid day, but one thing I think is important to recognize on JPM is that the markets are at new highs in the recent few days, and if we go back to the SPY, I just want to show you this again. If I just zoom out, I mean, the markets here from the low last Tuesday have just gone straight up. The market in terms of this 1 week span is at new highs. However, JP Morgan Morgan, if we go to the JP Morgan chart, look at this, and JP Morgan is the market, so you have to pay attention to that. JP Morgan still is not able to take out the pivot high from last Friday. And again, look at that ugly sell-off on last Friday, and JP Morgan is even starting to roll over here, which does bear a little bit of monitoring in terms of where this market may go the rest of the day. Although, again, I don't think a major sell-off would come in the rest of the day, but I do think it could be boding for a future day sell-off in the next few days in the market. And again, whether or not it's a huge sell-off or not, I don't know. It's just a matter of knowing that JP Morgan is a key leader, and it's not performing as well as you might expect, nor is it making new highs for the week over the past week. All right, other stocks out there, Goldman Sachs, same thing with Goldman Sachs, not taking out Friday's high and also has curled over. So the financials, again, which were very strong early in the day, moving up, have now rolled over a little bit. Still strong on the day, but not nearly strong as the market overall. And again, just to give you a basis for that, we're seeing Goldman Sachs up about 2.25%, while the Dow Jones Industrial Average is up 2.5, Nasdaq's up 3, and S&P's up about 2.75. So it's actually lagging the overall market by a little bit, and financials technically should be leading the market. Right, so these are just little keys that you want to pay attention to. And again, on the daily chart of the spiders, as long as we don't take out those levels, I continue to monitor and believe that the markets will possibly run into resistance over the next day or so and possibly turn back down a little bit. And you can make some money on the downside. At least that's the way I'm positioning myself in certain things. Now, if you want to know exactly what I've shorted or exactly what I'm buying, just take the 7-day free trial to the Research Center and the Intraday Stock Chat. You'll get all the information. You get my exact entries basically within the minute I take those entries as I post them up for you guys all to see. In addition, you can come join and take a look at the videos every night. I do a hardcore video about 30 minutes in length of market analysis, talking about trades, talking about setups, talking about the technical proprietary levels that we give you guys that work out so well, that's enabled us to profit in any market, both up or down, over the last multiple weeks, multiple months, multiple years. All right, and again, you can always join the Intraday Stock Chat if you want live analysis, live charts, and day trades and swing trades. That's always an option as well. There's a 7-day free trial for that. All right, let's take a look at a couple other stocks out there. What else is moving? Apple Computer. Take a look at Apple, up $14 today. One thing I've said on Apple here, and this was a great call, I gave a shorting level on Apple in terms of a day trade today in the Intraday Stock Chat, just as it hit this pivot high right around the 184.50 to 75 level. It hit that level perfectly, and look at the pullback. It actually pulled all the way back to about 382. So 385 right here, 384.75, all the way back to 382 and change, and then it's bounced up, and see how it can't get through that line as well. And Apple actually looking a little bit weaker here. It's just a matter of volume today, and that's the thing, folks. Even the spiders look a little on the weaker side this afternoon, but without the volume, it's very tough for them to sell. You'll need a surge in volume if there's going to be any sort of major sell-off later in the day, and because of that and the lack of volume based on the bond market being closed, it's hard for me to imagine that that will happen. All right, so just again, keep that in mind, and we'll continue to monitor and see again how it all plays out. All right, let's take a look at a couple other stocks out there. Google having a very, very solid day, up $18.70. There was a little bit of resistance right here on Google that it pushed through in the short term. Interestingly enough, look at where it went right up underneath this next little bit of a level, and that's where it's sitting right now. If we go to the daily chart of Google, you can see it's closing in on the 50-moving average. 50-moving average should be some good resistance. Quite a bounce off this little bit of a double bottom right here. See, the double bottom got pierced 2 consecutive days, never closed below, and has continued to move up ever since then. That's basically a move off the low from 480 to about 530 and change, or a $50 move in Google. Amazon's also having a pretty solid day, up $6. Very nice move there. Chevron, Exxon, both very strong. But again, I think the key here is you got to start watching these financial stocks. The financials are the ones that are going to lead or not lead the market, and the market ultimately seems to follow those financials, especially JP Morgan Chase. So keep an eye on JPM overall. And again, let me just bring that chart up right now to kind of keep an eye on it and see exactly what's doing here. And again, yeah, you're bouncing a little bit on the intraday, but you've still kind of rolled over. You're below the 20 moving average. And again, you could make a case that, I'm just trying to see here. Yeah, you almost have a little small head and shoulders, very small head and shoulders here. But, it's not the greatest of one, but you can kind of see it right in that respect. And looks like, again, as long as we're below the 20 moving average and stay below, you could roll over a little bit more today. Keep an eye on that stock. I released the hidden gem today, folks. Again, this is going to be a long-term hidden gem over the next 6 months. My guess is it returns 200 to 300%. You can join the Research Center, take the free trial. You can get that alert and that video that I did on the hidden gem, which is a small cap, again, with a minimal expectation of 50% return. But again, I do think this one will do 200 to 300% in the next 6 months. In addition, come join, get these live alerts, these live trades that we keep on putting out. The money we've made, that subscribers have made, has rivaled institutions, even in fact, even better than institutions. It's been unbelievable because we've been nailing every move up and every move down in this market, and I continue to do so and plan on doing so in the future. All right, come join us here at InTheMoneyStocks.com. We'll see you soon. Take care.